of interest? And again, none. So thank you. We'll move on to agenda item 3, which is confirmation of the previous minutes. So I'd now like to just ask whether there are any errors or omissions. Councillor Hopkins.
Yeah, Mr. Chair, I raise this one because it's a matter of meaning, and I could otherwise I would have done it offline. But on page 8, at the very bottom, second to last paragraph on that page, the chair agreed this would be a great insight to include, along with benchmarking scores against other councils. Full stop. For example, how happy are you with your power bill? I think it probably should read against other councils and organisations, because councils don't send out power bills. But my real concern on that was the last sentence, and I genuinely don't understand it. And that's why I raised it at the meeting. Regarding 4 in 10 people trust council to do its best for the community, comparing that with other councils and other metrics would provide necessary context to that. Now, I think what it's saying is regarding the community. I'm trying to think of the exact wording of the survey regarding the resident satisfaction survey figure showing that only 4 in 10% trust council will do its best. It would be important to compare that with other councils, but it's not. I raise it because that's precisely. That's a matter of meaning, and yeah.
Look, I agree. I think the comment around the power bill was just a reference to say that sometimes when you're asking for surveys, you're never going to get somebody. I'm absolutely wrapped with it, and so for me, that conversation was around being able to benchmark our scores against other councils and other organisations. So, and then we used the example of 4 in 10 people trusting the council, and on the surface, that looks like a really awful score. But if compared to other councils, it's 3 in 10. So that's where the benchmarking conversation came in. I'd be quite happy to reword that offline with the governance advisor and have it make more sense.
On that basis, I'll move
Excellent, thank you. Do we have a seconder to Councillor Hopkins' movement? Councillor Deputy Mayor Halale. Thank you very much. So all those in favour? Aye. Against? And that's passed. So we'll now move on to agenda item 4. And we'll go to 4.1 first, the financial report for Q1 24. Mr. Hope. Ms. Nichols.
Thank you. So the result for the first quarter of the year is pretty much as planned. Revenue is slightly higher. Expenditure is about 4% higher than budget. So it's just continuation of the ongoing cost increases we're having to deal with. You will see on the next page, I have reforecast for the year-end budget, 12-month forecast, the 5th column along. So just tried to take that 7% increase in expenditure and have a check to see what our year-end result might look like. And it's looking like we could swing into a loss there. So we're going to keep a close eye on expenditure in the department level for the rest of the year. But a lot of the variances at 30 September were due to timing and should right themselves over the rest of the year. Balance sheet's pretty much as expected. There's a few significant variances, and that's just to do with when we set the budget for the annual plan. We don't have the final 30 June results yet, so there's a swing there due to the significant valuation. And then CapEx is a lot higher than budgeted, and that's also a timing difference that you'll remember a few weeks ago approving the carry forwards into this year. So a lot of that work is now underway.
Thank you. I'll open that up to questions from the council. Councillor Hopkins.
Thank you, Mr. Chair. I have a few. So just on that page 12, are you saying that all the capital expenditure increase is due to timing variances? Because the sentence reads this is largely due to timing variances and cost increases. It's suggesting 2 separate things. If it is the latter, I think it might have been helpful to have a few more details. On the next page, if I may, Mr. Chair, Can somebody explain why the variance for property and, I get the variance for development and RMA contributions, it's probably the economic downturn. But why is property variation below budget? Why are finance costs so significantly above budget? And now that the High Court has ruled that fluoridization of water, or the decision to do it, it was done on an illegal basis, and until that's changed, can't happen. What happens to the grant from the Ministry of Health that's referenced on that page?
Okay,
Oh, sorry, one more question on the next page. How come our total public equity has gone down?
Okay, so that's quite a few questions. We'll take them one at a time.
Property rental, so that's a timing difference because in the budget we break it down per month, and we expected that in September the rates would increase, so our rental would start going up from September, so the budget looked higher for that first quarter. But because it's been deferred another month, we haven't started the rates increases and the property rental increases until later than expected, so it won't show up till the next quarter. The fluoridation, the grant will sit in liabilities until it's incurred. So we've received the money, it just sits there and we can't expense that until we do the work. Finance revenue, so that is discussed there. It's a bit the costs have increased to do with the increased borrowing, higher than expected, and obviously the rates are higher. You asked about from the summary of CapEx. So there's a lot more detail on page 15. There's a breakdown by department and a few bullet points there about specific projects and variances.
Sorry, just picking up on that comment around the finance expenditure. At the time of this report, as at 30 September, borrowings were lower than budgeted, so it must just be interest costs.
Yeah.
So that would, yeah, I mean, I'll talk more in the Treasury report about borrowings, but it's important to note that as at 30 September, our borrowings were less than budgeted, but our finance costs were greater just simply because of the increased interest rate costs.
Yeah. Like timing variances per month, so each month independently, like July and August could have had higher borrowing than what we budgeted, so it's just ebbs and flows. Was there any other questions?
Well, yeah, on the next page, there was I'm surprised to see that our total public equity is down. And the same applies with our inventory and current assets. But is that decline in total public equity of note or not?
Yeah, so it's to do with the opening balances. Like when we look in the annual report, you'll see differences in the closing 30 June 23 result is different from when we speak it. So there's huge variances in the valuations. They're really, really hard to budget. So we had a rolling valuation done at 30 June 23. So that's the significant variance in the equity balance there. And the other side of that is in property, plant and equipment.
So you see there, Councillor Hopkins, that on the following page, the first bullet point, equity is 40 million variance due to primarily that rolling revaluation.
Well, that would have taken it up, not down, wouldn't it? I mean, that's why I asked. If you look at the actual, it's less. The actual in 2024 is less, only slightly, but less than the actual in 2023. And with all the valuations going north, I would have thought that doesn't. That's why I'm asking it. Yes, it's only a minus 3.4% variance, but it does strike me as well, is it a problem? That's all I'm asking. It seems to me that it's the first time I've ever seen our equity go down on an annual basis.
So the actual result of total equity was 1.149 at 30 June 23. And now 4 months later, it's 1.146. So it's just gone down according to the loss that we've made, the $3 million loss.
The $3 million loss being the differential primarily between the property, plant and equipment and the roading valuations.
I'm just talking about for this 3 months. So forget budget for a second. So on page 14, total public equity is 1.149 against actual, now 1.146. So it's gone down 3 million. And that is because of the net loss that we've made for the 3 months of 3 million on page 13. So that shows that it's just gone down 3 million from what you'll see in the annual report, what the audited figure was then. So it's only gone down 3 million, but our budgets were way off because of the valuations.
Right.
So it's just an opening balance thing.
I understand it. I mean, I don't like to see equity go down, but I understand it. Okay, Councillor Hopkins, did you have any further questions? Do any other councillors have any questions or comments? Mr. Hyde.
Sorry, I'd just like to clarify about the fluoridation issue. So yes, we received the grant, but we have actually, we have pretty much spent all of that because we were required to purchase a certain number of materials and plant that have been installed into the system. They are not operational yet, but we have spent most of that money because really to anticipate complying with the original timing, we needed to get that project underway. And also there is a bit more clarity about the decision from the High Court. And at the moment, it's made a determination about the process. It has not issued any relief, so it has not vacated the orders as of. Essentially, they said it was a procedural issue that the ministry is being given an opportunity to address, but at the moment they still haven't vacated the orders. So we are continuing the process of having everything in place to allow this to occur, but it won't happen. Basically, it won't be turned on until there is clarity around this issue. It is not as clear as it is not. They have not declared it illegal.
But is there any risk that we have to return the grant?
No, absolutely not. Because we have basically spent it on the purpose the grant was intended for. There's no ability to claim it back.
Okay, so we just might have kit sitting out there that's not getting turned on.
Yes.
Thank you. Are there any other questions, Councillor Blackler?
I think on page 15, the capital expenditure breakdown with the variance from budget, I just wanted to clarify, is there a combination of inflation and timing variance, or is it just timing variance? And what's kind of the rough split in terms of the inflationary pressure component of the variance to budget?
I'll cover that. So really the only project that we've seen a significant change of cost is in relation to the Amarama water treatment upgrades, and that has gone through council and sort of been, I think, sort of traversed pretty well. The other major contracts have been at or under budget. So the ones we're talking about, the Western renewals, Kakanui renewals, the additional reservoir that we're just starting to spend on, but again that went through council because really the option of increasing the size of the tank, and the other one is project reclaim, which is the total contract value is less than the original estimate. What is occurring is that the contractors were given flexibility around the time that they could deliver it in, and were encouraged to deliver it quicker if possible because of the amount of disruption these projects really create in the community. Both of South Roads is the primary contractor for Western, and Whitestone is the primary contractor for Kakanui, have both taken up that challenge and are delivering it at a far quicker basis than originally anticipated. So that's the positive side of that, and it is a matter that we'll talk about in the Treasury policy, that there is a negative side of that as well, and that it really is the demand on debt. So I think the Chair wants to talk about that in the Treasury report.
But my understanding from conversations that we had around this was that additional $4.4 million of CapEx spend was budgeted for. It's just we're delivering it earlier in this instance.
It's purely timing.
So it will catch itself up.
Yeah.
Thank you. Any further questions, Councillor McCone?
Just a couple on page 14 under current assets held for sale. Is that just a nominal figure, or have we got something that we're actually trying to sell? And secondly, on page 15, we've got the capital expenditure and the actual spend for the 3 months as opposed to budget. And as Paul just said, that's coming through. Is that the end of it? So at the end of 12 months, that should balance out closely to what the actual 12-month budget is, as opposed to just this quarter?
No, particularly, we had quite extended timeframes, particularly for the original estimate. I think for the project reclaim was like a 24-month spending period, and now that is significantly shorter. Western was 18 months. Kakanui was over a year. So no, it will be significantly higher at the end of this year than we anticipated.
Because
of timing.
Because of the timing of the following years.
So yeah, it's all timing issues that I'll just address the ones where we identified there was a cost higher than budget. All these are actually lower than budget. They're just happening significantly faster than the original timeframes.
And your second question around the assets held for sale at 1.15 million.
Getting a frowny face from Amanda and a blank expression from me. Yeah, we'll need to look into that one. It is a purely accounting classification.
Okay, so you'll revert back.
Yep.
Thank you. Councillor Hopkins.
Yeah, sorry, a couple of very quickly. Under current assets, can Amanda or Paul explain why the inventory is down from 136 to 91? And also at the bottom of the page, current liabilities provisions up 115.4% from, well, the budget was 65 and the actual was 140. Can those two figures be explained, please?
The inventory, I think it's probably returning more to a normal level. We did purchase some materials, particularly piping, because we knew we were going to undertake work, and it was just some good pricing and to get it all at once. So that's just been expended through the contracts.
What about the provisions?
Sitting around the same as what they were for 2023. But significantly higher than budget. What in a relative sense?
Yeah.
Can't answer why the budget was estimating to be sort of twice what the actuals are.
We're talking about an $80,000 figure here, but I guess the percentage is what really stands out there. So that, again, we can follow up on that. Councillor McCone.
So just for clarification, so if we carry on with the actual spend on the capital expenditure, where do you see us being at the end of the fourth quarter? I know it's a ballpark figure, but as a guidance, so where do you think we're going to be as opposed to the budget for what we've budgeted for on the total spend for the year?
So I get, just to preempt that, there is a conversation that I want to have as part of the Treasury report that might tease that a little bit more for you around current debt and where debt's going. So you had a question, Councillor Blackler?
I think you just had two questions. I just wanted to confirm that the increase associated with depreciation and amortization is related to the revaluation that wasn't budgeted for. Is that an explanation for that? And with the personnel costs being down and the other expenses being up, I presume that consulting expenses might sit under other expenses. So do they directly offset each other, or is there is it unbalanced, if you like?
Sorry, I don't know enough of the budgets in detail, but yeah, so consultancy is included in other expenditures. So there could be an element of, you know, backfilling staff vacancies with consultants still. What was the other? Depreciation is because of the increase in CapEx. So obviously if we double our CapEx spend, then we capitalise that from when it was made and then start depreciating earlier than when we expected.
Yeah. Thank you.
Excellent, thank you. Are there any further questions? If not, then I will ask someone to please move that we accept the report. Councillor Hopkins, I have a seconder. Councillor Demi Halale, thank you. So all those in favour, please say aye. Aye. Against? And that is carried. Thank you very much. And we'll now move on to agenda item 4.2, which was the agenda addendum circulated, I think, yesterday. No. Last week. Yeah. In any sense, we'll move on to agenda item 4.2, the Treasury report. And again, I'll hand it over to Paul and Amanda to talk to.
Yeah. So if you hit the wee arrow in the left-hand column, the right-hand arrow, that should take you straight to it.
So the results at 30 September in terms of the finances, there's a 2.3 higher cash term deposit and 3.9 less borrowed from LGFA than was planned in the budget. There's also 1.9 of loans to other entities, which is the extra loan to Waitaki District Health Services that wasn't in the budget. So not a too bad position. When you look on page 4, you can see the offset of cash and investments against borrowings. So the net position is 4.4, but we had budgeted to be 12.4. And just so you're aware, we have made some extra borrowing after 30 September as well. So we're actually sitting at $61 million now borrowed from LGFA, and our final budget was expected to be 50. So we are well over at the moment.
So this is where I wanted to bring the discussion, right? I mean, end of September, things look swimming, and then we come to the Treasury report, and tucked away in a paragraph and at the end is and by the way, Council, we've borrowed 16 million more dollars in the past month and a half, and so we're now $11 million over our budget. And the explanation that I've got for that here is half a dozen words talking about some projects, some landfill, and council's commitments to on-lend further sums to various external parties. So I don't know how the other councillors feel about this, but I don't feel like this is enough of an explanation for why we are where we are.
Just so you're aware, so that lending is still sitting in the bank. So we currently have 13.3 million sitting in our call account. So it's on hold for these CapEx projects because the timing of the CapEx has come forward so significantly, and it's double what we expected. So we don't want to be caught with no cash and have to borrow from the CAL facility at the higher rate. So
Sure,
while we have extra borrowing, it's still sitting in the bank. So
but we borrowed it
At the
because
moment.
we're intending to spend
Yes.
it.
yes, because of the
Um,
higher capex, as we talked about earlier.
Yeah, it's just an awful lot of money to be taken on board, and I think to Councillor McComb's comment before, I'm pretty interested in getting a better understanding about whether this is a pattern that continues on for the remainder of the financial year, and where, given that we're now end of November and we're $11 million further in debt, albeit that it's in the bank at the moment, but it's going to convert to debt. If we're $11 million more in debt now than we were budgeted on being, where do we think we're going to be at the end of the year? And is that palatable?
Well, the carry forward budgets were approved a few weeks ago, and that's principally funded by debt. So it's going to be much higher at 30 June 24.
So. Yeah, clearly this needs some more commentary. Right. What is clear is there is a bit of a breakdown in the way we are translating, I think, decisions that are occurring in here, and then reflecting those and updating our cash flow forecasts that we develop as part of the annual plan process. In the past, because things have been relatively stable and items have been delivered generally at or behind the expected time, the process we had functioned reasonably well. I think with the changes that have occurred really probably last year, but certainly since the setting of or the development of the annual plan budget, is that matters are being accelerated and decisions are being made in the council chamber, and we're not picking up the cash flow implications and overall borrowing implications of those and reflecting them in a proactive way back to the council to highlight the cumulative impact on the debt position. So as I sort of ran through, I think all of the individual items have come through council or the governance team, and you have been made aware of them, but we have not made you aware of the cumulative impact on the debt position as those have been made or back to this committee. I think really the ideal time to have done that would have been the Treasury strategy for the second quarter, because we probably knew enough about it. But you know, it is, I think, particularly the change in the project reclaim. It's like we looked at the total amount and it was like, oh, that's all right because that's within budget, but not the implication of the very, very different timing of the cash flow. So it's like, oh, right, well, Western, it's a bit of this, and then Kakanui, it's going to be faster. And that's an operational one that we're talking to the asset team about. We've got an out process in place to make sure we're getting those cash flows through at an operational level. So that's why we've borrowed the amount we have, because we're now seeing the projected cash flow, particularly over the December, January, February period, where the work will continue, but we'll have less staff available to actually initiate the borrowing. So we've addressed that, but we have not been taken that step of saying, oh, here's the cumulative effect in reporting it to you. So you know, it's it's a very appropriate question, and all I can say is, look, yes, we need to improve the visibility of this to yourselves, so it's very clear both for this year and, as Councillor McCone raised, what will be our likely position at the end of this financial year, because that will be a critical starting point for the discussions in terms of the long-term plan and the borrowing profile that we are anticipating over that period. So yes, apologies, but it hasn't been clear enough. We are working on things, but yeah, we just didn't. We've addressed some of it, but not all of it in a timely enough manner.
Yeah, so I would like to work with you outside of here to work out how we can bring that about, because I suspect looking at some of the faces around here, there's some people that didn't quite appreciate what the implications of fast tracking some of these projects would be. And I'm interested. What was the average weighted cost of the debt that we've taken on board now, and what's the impact of that likely to be on our financial costs over the remaining course of the year? And what does the number look like at the end of the year? Councillor McKay.
So with the funds that are sitting there on hold, how many of those projects could actually be stopped right now that are sitting out there?
None of them, because it is just, so Western's underway, Kakamoo's underway, and Project Reclaim's underway, where the decision about what's noted in the report to make further advances to other parties. Again, it's a contributing factor, not a major contributing factor. So the additional loans to Wayland and to Observatory Village, they all have cash demands. So projects that are underway, most of them are, I mean, they were budgeted for, so it's timing, not total cost or total impact.
Yeah, but timing plays an important role in how the year plays out. Councillor Blackler.
Oh yeah, I just wanted to make the comment that, like, some specifics around this. So, you know, we're complicit in this decision making as well around our decisions with respect to Wayland Lodge, the additional funding to Observatory, all these, as you referenced, Mr. Hope, they're cumulatively having an impact at this end. So I think your suggestion of seeing that the overall impact of our additional decision making around other projects outside of what we've planned on the cash position are critical.
Yeah, I agree. I think we need to, when you make decisions as a council, you need to know that that means that you're going to be borrowing X amount more, X time earlier, and the cost associated with that is likely to be Y. Mayor Kircher. Sorry, Councillor Holden.
I was getting a little bit off track. But just getting back to saying that borrowing for the project reclaim, is there any bearing on the exemption from councils having to pay the waste levy now and relocated waste that will rechange that budget?
Hopefully Mr. Cook's listening and he might be able to respond to that one.
I was going to make a comment on that. So it's just to do with project reclaim. So we are able to apply for a waiver of waste levies on that, and going by the criteria for that, we should be successful. So hopefully that will mean at least a couple of $1 million that comes off that particular cost activity.
Okay.
Is that your understanding, Mr. Cook?
It's my understanding in terms of the levy that was budgeted, we should be able to get that back. There's some paperwork to be done at central government level in order to get that, be certain, but also the overall project cost by going with the contract we went was substantially cheaper, but it comes over a much shorter time frame.
Thank you. Did you have a?
It was essentially that, but I guess if there's a question, it's that we absolutely need to keep the costs down on that particular project, and any savings that come along, such as the waste levy, and we need to bank those because we don't need a bigger debt than what's needed. And with anything, we've approved a budget, but we are certainly hopeful that it comes in well under that. Thank you.
Councillor Hopkins.
Yeah, just a comment or a question and a comment. I don't think it's not just us that perhaps needs or needed further amplification. Ratepayers and members of the community did as well. I had an email from somebody focusing exactly on the paragraph you picked up, saying just detail what's going on here. So they were asking exactly the same question you were. Now, if I understand, and just so that clarification, if you will, Paul. If I understand what you've said correctly, the 11 million of additional borrowing, or the amount that we've borrowed in October and November, specifically relates to a series of projects, accelerated water projects, which we have debated and voted on around the council table, or in the chamber, as well as the Hampden landfill project. So essentially this is an inadequate one paragraph explanation that only partially resolves a holistic or big picture reporting failure or shortcoming. Let no criticism sit on it. We've realised we need to do something, and you've realised it, we've realised it, and this paragraph draws it to everyone's attention. Is that a fair summary of what you've said? And just one other very quick question. What are the on-lending sums to various external parties that you're talking about in respect of that 11 million? Well, is it Wayland Lodge and the health services?
I think I'm conscious of time, and rather than delving into the detail here, I think we're all in agreement that that paragraph isn't enough.
No.
That we need to understand more about it, and that we need to work on better ways of surfacing to the council members when you're making decisions to bring things forward, and when you're looking at fast tracking or accelerating things, that you understand fully the implications of what you're signing off on.
Mr. Chairman, one other question in relation to the report. It doesn't relate to this paragraph at all, if I may.
Sorry, can I just?
Oh, sorry.
But, except all that, I mean, the paragraph was well intentioned, and it should have been longer, but it was like, it was also, all we were doing was, this is a first report to the first quarter. So it's like, that was the focus, and it's like, oh, we shouldn't have something about report to the first quarter and then ignore what's happened afterwards. So it was like, sorry, and this was a little late because of commitments to the annual report process that we're moving to. So yeah, it was like, oh, here it is. If we'd had a bit more time, it would have been a lot longer. But it was like, no, we shouldn't just have a report to the end of the quarter and ignore something very significant that's happened subsequent. That should have been more explained, and it really has highlighted. I think it's a deficiency. It's a deficiency that we need to address.
Did we meet highlight?
Yeah, no, thank you for that. And I think we've just heard all the views that are expressed around the table, but I'm also just supportive of our staff in terms of their capacity and their capability, but also being able to provide them with the tools and the mechanisms to be able to effectively essentially report back to us. So I don't think it's a blame kind of thing. It's something that we should all take into account and take responsibility for moving forward. So I think that's about it for now.
Thank you. Councillor McKay.
Yeah, I just wanted to further comment on Hannah and back what she said, and I'm hoping that transformation would actually speed this process up and show this up a lot earlier than it's coming to. So, it's just one of those things we've got to get over and get on with it and fix it.
Last question, Councillor.
Oh yeah, I just I also acknowledge we're being critical of an attempt to be transparent. So, I do want to acknowledge that. I did have a question on page 5. In previous sessions, I've requested as well. I would like us to, we list it for all the other parties. I'd like to see what the interest rate is for the Whitestone Civic Trust. And also just wanted to confirm that the 65,000 cost of finance, in addition to revenue from finance, is, and that's all associated with the NOIC loan, and as stated in this report, will be corrected in December.
Yeah. So the NOIC loan adjusts from 1 January 24. It should be right.
Okay. Last one.
Very quick question, Mr. Chair. Thank you. Page 7, under the list of reasons for borrowing from the LGFA, under the August explanation, no loan repayments from Observatory Village Life Care Trust, and then reduced dividend income. Can what dividend are we talking about in that context, please?
So this was in the prior year, August 22. And that would have been Whitestone Contracting, lower dividend than expected in that year.
So, okay, so that's the first time in the chamber I have heard officers say we are borrowing money to make up for the dividend that Whitestone isn't giving us. Ergo, that's a cost against Whitestone that further diminishes the return on initial shareholder funds.
Yeah, no, sorry, that explanation has been probably in the last 5 or 6 versions of this report.
Okay.
Yeah, so. And it's a straight cash flow issue that we were expecting more cash inflow from Whitestone. They had a very hard trading year, a year ago, the dividend was reduced. So no, we only add to the bottom of this table. We don't change any of the text in the earlier line, so it has been here for a while.
But Councillor Hopkins does raise a good point that that's not an ideal situation for us to be in. Okay, look, I am conscious of time. I think that there's been some really useful discussion in here, and as Deputy Mayor Halala said before, this is absolutely not a blame environment, but I think it's something that we can all work together to make better going forward. So on that basis, could I please ask for somebody to move that we accept the Treasury report? Councillor McCone seconded. Councillor Blackler, thank you. So all those in favour, please say aye.
Aye.
Against? That is carried, and we'll move on now to agenda item 4.3, which is the draft annual report update. Now I am conscious that there are a whole lot of pages in here, and that it's absolutely wasn't the expectation that that you as councillors read through that page by page. The reason for bringing this draft report to the par is that you did read through every page. That's fantastic. You're probably the only one. But I just wanted this to come to the par now because it's gone to the auditors in its current form. It would be fair to say, Amanda, that and Paul, that the work with the auditors this year has been very challenging. We've had the issues with the fees at the start. We've got auditors looking at various things. The auditors are working completely remotely, which has placed significant additional workload on council staff to help try and get things ready. And so that in itself is not ideal. But what I wanted the draft report to come to the par today for was for Paul and Amanda just to call out anything that might be in here that we think we should be paying attention to as a risk committee ahead of it being finalised.
Yep, so I don't have too much further to add since we provided this draft on Wednesday. That's still the most current draft. It's been a challenging process, but I think overall it's probably come to a good point, and the audit has run relatively smoothly in the last few weeks. They have audited off-site and haven't found too many issues. We had all of the changes Friday a week ago and processed those, sent it back on Wednesday, and then there's just the last few queries being trickled through now. So we are looking on track to sign on the 12th. The results haven't really changed from when I presented the 30 June 23 result at a PAR meeting in August. The valuation has been booked now. So as we talked about in the last item, that affected our bottom line against budget more than we expected. And I don't really have anything else to report.
Okay. Was there anything in there that you thought worthy of bringing to the attention of the PAR?
I mean, really, as I usually do, really wanted to acknowledge the work of the team getting this document together. I think it is late, so it hasn't met. It's not going to meet the statutory deadline for a variety of reasons, but really the most significant being the difficulties we had negotiating an arrangement with Audit New Zealand. But I think, we used that time was used really well to give a very clean document, first version to them. The really only one matter of, I suppose, that had a sort of reasonable dollars attached to it, and that was just in relation to the treatment of accumulated depreciation as part of the rating revaluation exercise. So very much a technical accounting issue rather than anything about the substance of the result. So again, it's just an opportunity to talk about the document and really happy to answer questions. I mean, we're anticipating from the issues that have been raised, we'd expect an unmodified opinion as in contrast to the prior year, with really the only matter that will be noted will probably be the missing deadline, and then there might be a bit of an argument about who was more to blame for that. So it's just another fight we will have, and probably really acknowledge the effort that the chair has made in engaging with Audit New Zealand and the Office of the Auditor General to try and make this process as eliminate some of the challenges that we were facing. So that has been appreciated.
Thank you. Councillor Blackler.
Thank you. Well done on the document. It's obviously been a lot of hard work going to it, and it's really comprehensive and interesting to read through. I just wanted to clarify, and this is probably a silly question to some, but from a new first time councillor going through this process perspective, the text in this document, is this worded as if we're at the end of the financial year, and the only exception to that would be like your note 33 with the events subsequent to the balance date? I see some nodding there. So in that note 33, I guess my question is it appropriate now that there's been a further change to affordable waters, as is what's stated in there, to add a further note that discusses what the next kind of iteration of that thinking is in that space?
I guess we'll take advice from the auditors, given that there is an intended change in legislation, but at the moment the legislation hasn't changed. So we'll see whether any wording tweaks are needed, but at the moment it's kind of the wording that we've got is the current situation that we're working to.
Yeah. Thank you. Councillor Hopkins.
Well, the problem I have with this, thank you for the document. An enormous amount of time and presumably money has been spent on something that we're required to produce, and I'm not sure is of genuine community benefit. That said, there are statements in here that, in my view, are contestable. And picking up on Tim's point, if you look on page 21, I would have thought even in that bottom paragraph, statements are presented as fact that aren't. Changes to the Three Waters Reform Program, now known as the Affordable Water Reform Program, in early 2023, indicated our water infrastructure and services will now be transferred. And personally, I would prefer to see that made conditional, so it would read would now be transferred. Because in all probability, irrespective of the penetrative audit, it won't be. Equally, on the next page, 5, under Waitaki Event Centre, we welcome the start of the build of the event centre in 2024. Well, we can't at this point say for certainty that that will happen. I'm not saying it won't, but I think that the statement of that as a fact is problematic. There are a number of other things in there. I don't know. I would like to see us say on page 26, at the very top of this, we're committed to our vision of making the Waitaki district the best place to be. Whenua Taurikura. Council writes an annual report for each financial year. Why don't we tell the truth? Council is required to write an annual report. Tell people that if we didn't have to do this, I suggest we damn well wouldn't. And we would defend that position to our community on the basis that it'd save a hell of a lot of money. on page 27, I'm concerned that the resident satisfaction survey results, to my mind, ignore some of the most problematic and challenging, that is to say, residents' attitudes to affordability, value for money, and trust in us as elected members, which I think are probably more important than public toilets or sealed roading network. How are we going to do this?
This is just intended as a summary of that survey, right? The full survey is available for anybody to look at, and I think it's okay. To your point before about cost and keeping costs down, you don't want to replicate everything in here that's already there. You want to do what you have to do.
Yeah, I'm suggesting, Mr. Chair, that the selection of responses from the survey is actually puts us in a slightly better light than the survey actually did. And if we were going to be honest about it, we'd bite the bullet and admit that we copped some pretty big flack from a lot of people on some pretty fundamental core issues. And I'm not saying you add them, I'm saying you replace them.
That's cool. Do you have a response to that? Or remainder, as difficult as it is to get a document of this size? Perfect.
Probably the only one, sorry. But like questions, sometimes they're easier to respond to if they're given individually. Because but you were on a roll, councillor, so I didn't want to interrupt. Look, I agree with the sentiment about if we had a choice, would we produce an annual report that looks exactly like this? And I think the answer would be no. But there needs to be an annual accountability document that is available to the public that essentially tells them what we did with their money and how we performed. And so I think that is, so something would be produced. Whether this is the most appropriate format, I think we could have a long discussion about that, but it is what it is because the legislation requires that it is audited, that it is prepared under generally accepted accounting practice, and this is what you end up with when that is stated in the legislation. So it's fight the legislation, and it is talked about often. I've been in at least 3 different discussions whether it was talked about whether this is the most appropriate way to be accountable to the public. But there's not much legislative will to actually do anything about it because this.
I think your point is right. There is a lot of really useful information in here that we should be sharing and need to share, and there will always be a way to do it better. But I think the staff have done an amazing job given the pressures that they've been under to get this, out in the environment that they've been operating in.
Mr. Chair, perhaps, this is going to come to council and be voted on. I guess the question I have, because there are a number of things in terms of the text, right through to page 127. How are we going to discuss? How do challenges to or questions about statements? I mean, for instance, there's a reference later on to elected councillors and youth council members are elected. Well, that's factually incorrect. Youth council members are appointed, not elected. So at what point do we get a chance to, and with whom do we discuss these things? And when?
As I mentioned at the start, the purpose of me wanting it to come here today before it came to you was for us to be able to discuss any items or areas of significance that there was a risk associated with. I suggest that the best thing to do would be for this document to then go into a review room, and you can provide your feedback directly to the team on that, and Amanda will be able to pick it up and work with it. So I think that's the best way to work through those iterations rather than as a par going through the document. So we'll do that. We'll put it in a review room. You can provide your feedback. Amanda and the team will pick up on it. Councillor McCone.
Yeah, look, again, I'd just like to congratulate. There's a huge amount of work gone here, and the basic principle is keep it simple, stupid, which means I can read it and understand it. So thank you for all that. I think for the general public, that's what it's got to be, and for everybody out there.
Like to produce that in a more readable document, so that that will currently being worked on and will be made available as soon as possible. And I think, that is here's the highlights. Try and get people a little more engaged, but we're not delusional about that. And it's really, if you want to know a bit more, that's when you go back to the renewal point.
Thank you. So look, on that basis, and on the basis that it's going to go into a review room for councillors to be able to provide direct feedback for the team to pick up on, could I ask somebody to please move that we accept the document? Councillor Blackler, seconded Councillor McCone. All those in favour, please say aye. Aye. Against? That is motion carried. Thank you very much. I now would like to signal our intention to move to public excluded and call for a mover and a seconder to go into that. Moved Councillor Blackler, seconded Deputy Mayor Halale. So all those in favour of us going into public excluded, please say aye. Aye. Against? Thank you. That's carried. Yes, I will. Thank you very much for that. Thank you for all of those online who have participated and listened in today. As always, we appreciate your interest and welcome you back for our next meeting.